Hello, everybody. Whoops. Yeah, let me see. Pick this camera, not the other one. Yes. Welcome in. It's Tuesday, and this is a very big show today with a lot of very good news, but some alarming news as well. So thank you all for coming, and brace yourselves for the end. In fact, if you are faint of heart, drop out before we get to the end. Anyway, let's jump in. Let's talk about what's going on in the world today. As usual, summer sucks. Can't say you weren't warned. So things are just flat to dead all across the board. And the crypto market is at 1.17 trillion. It's about, what was that, 300 million off of what it was this time last week. Volume 26 billion, pretty much the same. Best performing sector, I think, is cannabis, which went up 111%. A lot of people thought cannabis would have been huge about 5 years ago and never really summed to anything. But that's just information. Crypto Fear and Greed Index 53. Price of Bitcoin is 29,100 and Ethereum is a little over 1,800. But there is some interesting stuff happening behind the scenes. And I do have a hard stop at 2:30. So we're going to blast through about 45 nuggets in 30 minutes or less. And of course, this is edutainment. And yeah, if you want to amplify your intelligence, you know what to do. Subscribe. And this will help you get on the train to a better future for you and your family. So let's start with the good news. There is quite a bit of good news today, believe it or not. First of all, I did mention Fear and Greed is down to 53. It was at 54 last week, if I recall correctly. So no great shakes there. I don't expect it to go below 50 until something big happens. Now let's talk about what we call drainage and proxies. So we are talking about Bitcoin proxies today, and this is a beautiful chart from the K33 team, and this is the contrast between our supply proxy and exchange balance and how it has grown. It used to be tight. So we're looking at the blue line compared to the black line. The black line is the exchange balance of Bitcoin as a percentage of circulating supply. And the blue line is the amount of Bitcoin stored in proxies like GBTC, like MicroStrategy, etc. We'll talk more about those guys later. And you can see here with exchange balances currently sitting at 11.8% of the circulating supply. And that is the same as very beginning of 2018, nearly 5 years ago. And then proxies started coming on the scene, a little later at the time, not really in earnest until GBTC started ramping up. But here you can see that the amount is about, I can't even read that anymore. Is that 16 or 18%? I don't want to say the wrong number. Let me see. 18.1% in proxies. So that's one view of how we look at the supply scarcity. The real thing is I always talk about pure form. It's okay to have proxies, but not too much in proxies in case they blow up or in case there's a scammer behind the scene. Now let's look at Bitcoin on exchanges and in proxies. Another view here you can see about 3.5 million Bitcoin are held across exchanges and diverse investment options, like I mentioned, Grayscale, MicroStrategy, etc. And you can see also some tokenized assets and wrapped assets. But this exchange-held Bitcoin stands at a multi-year low, and it's now about 2.2 million Bitcoin. And it basically implies constrained market liquidity for potential for intensified volatility if there is a resurgence of momentum. Think Bitcoin ETF. Think Grayscale winning a lawsuit. I'll talk about that in a minute too. It's all connected somehow. Let's look at the last week. Again, nothing happened. Two items are up 1%. That's ETH and Bitcoin. One was down 1%. That's Binance. So basically, flat. And that's no surprise. Let's look at Bitcoin drainage continues, in support of what we had before. This is from Crypto Quant. And really just cast your eyes on that red line going down. That is the supply in exchanges as a percentage of total Bitcoin supply. And it's only getting worse. This supply crunch thing is a real issue. I knew it would come, but I didn't think it would happen so fast. Like literally, if things continue at this rate, by sometime in 2025, there'll be pretty much nothing left. So watch this space very, very carefully. Now, let's look at Bitcoin versus QQQ. A lot of talk about people shorting the QQQ. I'll talk about that later as well. But you can see here, over the last 90 days, Bitcoin is up 8%. QQQ is up 16%. Remember, the first 90 days of the year, Bitcoin had a huge rampage. And now it's taking a breather. That's what happens. You run up a hill for like about 3 months, and then you take a stop. Breathe. Then you run again after a 3-month breather. So watch this space. Now, there is some interesting stuff happening. And as you know, I'm a big fan of Nayib Bukele. He is not only very brave for many reasons to take the jump into Bitcoin, but also to fight domestic violence or violence at home. I shouldn't say domestic violence. It sounds like something else. But he also created a Bitcoin bond. And now names like JP Morgan and Eaton Vance and PGIM are investing in or recommending El Salvador's national debt. The IMF must be rolling in their graves or whatever the hell they do. I don't know. But Bukele is proving himself to be a genius. And I think for 3 main reasons. One, global bonds are flagging, but his Bitcoin bond has an impressive return. The Bitcoin adoption and rally overseen by El Salvador President Nayib Bukele has resulted in 70% returns. That is the highest of all emerging market dollar bonds so far this year. And these returns are drawing investors back into the market. And JP Morgan, who hate Bitcoin, are now investing in these bonds and urging their clients to do so as well. So we've gone beyond the total tipping point here. And this is in Latin America. And despite over, human rights abuse and all that other stuff. And they are also hiring an expert, an IMF veteran advisor, to see if they can pay back some of their IMF debt too. And there's reduced default risk, etc. I mean, once we get the bull market on for Bitcoin, this guy really will look like an absolute genius. So shout out to Nayib. Let's talk about bonds as well. I did mention this on Twitter the other day and in Patreon, but bonds are no longer considered safe investments compared to equities in 2023. US Treasuries, traditionally seen as safe, had negative returns of 18% in 2022, and they're down so far this year too. And bonds and equities typically both possess risk, but the day of the bonds are done, and especially after seeing things like Fitch downgrades, etc. The world has changed and things are different this time. I know they're dangerous words, but there we are. Bitcoin halving clock. We have 245 days to go, and I know how fast time goes these days. That's going to go real quick. It'll be Christmas before you know it, and then it'll be, what's that European song? The Final Countdown. So it'll be fun. Anyway, let's look at money flows, digital asset fund flows. So far, last week totaled 30 million, and part of it was maybe helped by the US inflation data, which was slightly above or below expectations, depending on which core inflation you were looking at. But this signifies that a September rate hike is less likely, and Bitcoin was the primary focus, and 27 million of that 29 million went into Bitcoin, which follows 3 prior weeks of outflows totaling 144 million. So not bad. Let's look at the breakdown. Who's getting the money? Last week, we did have a massive record inflow into one asset that'll remain nameless. But Bitcoin did get that big chunk. You can see the 27 million. Short Bitcoin had another outflow of about, 2.7 million. Solana, another 400,000. XRP, 500,000. Litecoin, 100,000. And the rest pretty much flat. So sentiment is good despite the quiet August. Wait till September hits, and then we'll see big numbers coming in here. Now let's look at some data for the what I call the L1, L2 wars, the daily active users by chain. You can see here the winner for August 14th, which is yesterday. Polygon, back top of the charts, 376,000 daily active users. Number 2, Solana, 340,000. Number 3, Ethereum, 319,000. And then tumbling all the way down, Aptos, 170,000. But Aptos leaped ahead of Arbitrum, which is now 142,000. And then Sui there, 111,000. And Optimism, 102,000. What is interesting about all this, and I've been talking about this for the longest time, you have this bifurcation between the old chains and all the new ones. And guess what's happening? Exactly like I said, people want better, cheaper, faster. It's just the nature of humans. But what's also important, if you aggregate all of these daily active users across just those top 6 chains, it shows you crypto is being more heavily adopted now than a month ago, than 3 months ago, than 6 months ago. So that's also a big positive for the space. Now, let's talk about ETFs versus MFs. MFs are mutual funds. And when it comes to trading and pricing, ETFs are traded like individual stocks on major exchanges. They're bought and sold at market prices throughout the day, and they do fluctuate as well. Whereas on the other hand, mutual funds are priced at daily net asset values calculated after the market closes, and they can only be purchased at this NAV through the mutual fund or a broker. But what's really important, and shout out to James Lavish as well, he had this in his Substack, which is a great Substack. But you can see orange is what you want you to cast your eye on. And these are basically ETFs versus blue, which is mutual funds. You can see mutual funds are shriveling up and dying, and all the money is going into ETFs. Why do we care? Well, Bitcoin will have an ETF, spot ETF soon as well. So that'll be bundled in here too as we go forward. Now back to crypto. Are we in altcoin season? Well, we had a huge drop down. We were north of 75 for quite a number of weeks over the past couple of weeks, but now we're back down to 35. So what's going on? Let's look at the breakdown of how things are comparing the top 50 cryptos compared to Bitcoin. And you'll see here, well, the majority now are actually performing worse than Bitcoin over the last 30 days. But there are some that are doing very well. XTC, HBAR, Hedera has been a lot in the news lately because they're working with CBDC Lite, aka Fed now, and that's getting a lot of people very excited. I personally don't know how value will accrue, but I tend to look into that in the near future as well. Like, is Hedera worth another look? Because last time I did look, I didn't like it. Then Shiba, Maker, Chainlink, Uniswap, Doge, Solana's in there somewhere. At least it was. I don't see where it is now. But that is the breakup of where we are right now. Where is... I can't even see it anywhere. I really need to figure this out. Anyway, that is kind of the nature of where the alt season is right now. And it's good to see maybe Bitcoin coming back to life. Let's talk about Bitcoin coming back to life as well. There's been a lot of change with the Grayscale Bitcoin Trust, which I'll talk about in the next slide. But here, Grayscale versus the SEC, this could pump Bitcoin price big time. There was talks of a decision being made today. This is the suit where Grayscale has taken the SEC to court, and many experts believe there's a 70% chance that Grayscale will win. And there's supposed to be a decision Friday, and this would have a big impact not only on Grayscale and conversion to a spot ETF, but also all the other stuff that's going on right now. But who knows? I doubt Gary Gensler wants to give up the ghost of killing crypto, so that may not happen. But I think it was Bloomberg Intelligence did say that Grayscale has a 70% chance of winning the lawsuit against the SEC to convert its Bitcoin trust into a Bitcoin ETF. And this is based on the judge's line of questioning during the oral arguments, if I recall correctly, as well as the fact that the SEC has already approved multiple Bitcoin futures and I think at least one or two leveraged Bitcoin futures, which is stupid. It's just corrupt. There's corruption somewhere, and I hope the court system can figure it out. Okay, off my soapbox. Let's talk about these discounts and what they look like today. Here you can see, for the first time and as long as I can remember, the GBTC discount over Bitcoin is now under 25%. It hit 23.69% today. And the Bitcoin price is $29,157. GBTC was $20.09. The amount of Bitcoin per GBTC, you can do the math, etc. And then, more importantly as well, the ETH premium over ETH was 35.65. Only a month ago, it was 55%. Now it's 35%. So calculating that, the GBTC has moved 107% swing in discount, okay, from 49% to 23%. And the ETH has moved 55%. It sounds weird, but 55% move from a 55% discount to 35.65% discount. That's a 55% move. And full disclosure, to the ire of many, I swapped pure form Bitcoin into Grayscale Ethereum Trust because I felt it was good to take advantage of the discount. And that worked out very well. So let's look at some options action. Bitcoin options action pre-halving is now guessing maybe by March 29, 2024, ballpark, the big bets are being placed on a $50,000 Bitcoin. I think it'd be 40 to 42K, but a lot of people are saying 50K. And by the way, I'm hearing my 42K number, which I've said all year, echoed around a lot. So a lot of people are gravitating to that 42K level. Ethereum options action, March 2024. Of course, the ETH is not impacted too heavily by the halving as Bitcoin is, but a lot of people are betting on $2,500, which isn't very exciting considering Ethereum was at $1,900 not too long ago, so it's only a $600 move. But I think it'll move a lot more. I just don't think a lot of people are playing the options trade on Deribit for Ethereum right now. So let's talk about Tesla real quick. A number of big pieces of news, because it's getting to be a time where mainstream media is just flooding the airwaves with Tesla FUD, which is awesome because it gives us a chance to snag some more at a discounted price. So big thank you to mainstream media for all your lies and crap. Anyway, this is Tesla cutting prices once again. Wow, when you dig into all this, it's like terrifying. Oh, cutting prices. But what the mainstream media do fail to recognize, and also many people on Wall Street, the scale of Tesla is phenomenal. Every incremental car they make out of one of their gigafactories, it gets cheaper to make. So they can afford to cut prices while maintaining margins, more or less. Also, many people believe it's a land grab, and it's a very clever strategic move. So Tesla shares did fall today after the company announced a fresh round of price cuts in mainland China. And the world is freaking out. But the actual dip wasn't too bad. And again, when you consider how much these factories are ramping and how they are leveraging economies of scale, they can make this happen. But again, Wall Street can't figure it out. In addition, this is just some US statistics from Piloli on Twitter. Great subscribe on Twitter. His US electric vehicle sales in the first half of 2023. If you look how many EVs, battery electric EVs, Tesla sold 330,000 in America alone. And then you look at all the other competitors and how much they made. And these competitors now just have expanding lots of unsold EVs. They're not shifting them because they're more expensive and they're far inferior to what Tesla has on offer. And that's part of the scale. So let's just, what Elon's probably doing is gently turning the screws on the competition and accelerating their demise, because you're going to see a lot of bankruptcies over the next couple of years. That is guaranteed. Now, speaking of scaling as well, this is a German article from Olaf Scholz, and it talks about the expansion of a new battery factory near Grünheide, near Berlin. And the EV maker is not only expanding their gigafactory to double the capacity, but also a new battery factory as well. A lot of Germans are worried about the water system not being able to support it. But I think this Olaf Scholz is much more interested in bringing and maintaining industry in that region for the people and jobs and everything else. So you got some infighting over in Germany, but again, at the end of the day, money normally wins. So also Tesla not only building gigafactories and battery factories and everything else, but per Soya Merit, they are now building first of a kind data centers that will be key to members of not only Tesla engineering, XAI, who knows what else they're going to put in there. It's going to be, and FSD capabilities, etc. They are really jumping and investing and scaling like no other company on earth. And people just need to wrap their heads around all of the stuff they're doing. And they're also expanding FSD in China. They're hiring a local operations team to support that as well. That will be huge. That is probably going to be the biggest car market in the world. And I've driven in China many times, and the roads there are actually far easier to drive on than the roads in San Francisco. FYI. So let's talk about short on time. I'm short on time today, so if I'm going too fast, you can always get all of this written by community writers in a Substack form, about 13 cents an edition, and they come out almost daily. So switching gears, the bad news, everybody. There is some bad news today. First of all, the last week for Bitcoin and crypto has been down, with the exception of Solana, Shiba Inu, HBAR, Uniswap, OKB, which is the exchange. They've all kind of beaten. But again, the week was kind of slow, not much happening. And in dollar terms, you can see here, Bitcoin just down a fraction, 0.19%. Bitcoin dominance down a bit to 48.27%. ETH down 0.31. Again, it's just a very, very slow time. But the odd little patch of green as well, you can see there too, in dollar terms. So that's enough time on that one. Let's look at the stock market. There's a lot of red here. And yes, summer doldrums. There you go. Tesla down 6%. big hit. Amazon 1.4%, Apple down 1.1%. Amazon had a very bad week last week. Nvidia flat, Microsoft down, and you can see a little bit of green over on the energy side and the pharma side. It's kind of rotation. We did talk about that about a month ago, the rotation from risk assets into energy for the summer and then back out in September, October. But there's more to talk about. This is one little piece that rattled everybody yesterday. I can't tell you the number of questions I got in the community from our friends at Patreon. Thank you to everybody on Patreon for being there. But people were saying, oh my God, Michael Burry, the world's going to end. Yeah, well, you know, he did play a masterstroke back in the year 2005 where he went short real estate. And he did get that right, although he nearly didn't get it right because of time and duration. He was early in his bet. But you can see here, he recently made a huge short, literally 88% or 90-something% of his whole portfolio going short the S&P 500 and the QQQ. But we don't know exactly when he did it. He did it before the end of June. We don't know which strikes. We don't know exactly how leveraged he is. But this does suggest for him a bearish outlook for the market. But the problem is, Burry is known for, you know, he's one of these kind of become a real perma-bear. And yes, he did win that bet against the U.S. housing market back in 2005, and then the 2008 crisis hit, but he came close because he nearly ran out of time. But Burry's historic data includes many incorrect predictions, such as calling for market crash 2017, 2019, early 2023, and not only him, but also heads of JP Morgan and others predicting all sorts of terrible stuff. But data and historical analysis suggest that the market tends to go up over time. Making prolonged bearish calls seems very much a loss-making strategy. So the good news is, like a broken clock, he'll eventually be right. But the question is, if you followed him into battle over the last 15 years, you would have lost your shirts. Anyway, enough on that. Now, this is kind of funny. Like, talk about lack of originality. We're in this time right now in crypto where people are spinning up tokens, dumping them on retail as quickly as they can. But this one just really takes the award for absolute lack of originality. If you mix Sui and Aptos, okay, I looked at the Aptos logo, that's that little round thing, and look at the new Say token. Look at their logo. It's like they copied the Aptos logo, but they did it when they were drunk. And then they took the name Sui and ripped out the U and replaced it with an E. So what is this? You could have asked a 12-year-old and a graphic designer, 12-year-old graphic designer, come up with a new logo for me, please. Something original, something unique. They would have done way better than that, rather than copying what is already out there. And look at the folks behind SEI, because I get a lot of questions too regarding SEI. It's like, oh, it's coming out today. What are we going to do? Should we buy it? But look at the players: Multi-Coin Capital, OKX Ventures, Foresight Ventures, Hypersphere Ventures, Bixen Ventures, Jump Capital, Flow Traders, you name it, Coinbase, Hudson River, Delphi. The question is, if you are not in at the same time as these folks, you're going to be rained on. And that's just how it works. You will become exit liquidity for these guys. So be careful. And we have checked SEI, and it has nothing unique. It's as if they're just cloning chains right now and just rolling them out on whatever other platform they can. So just be careful out there. Now, in ugly news, to substantiate this news, let's go to our dumpage of the week. And these are the major token dumpages coming over the next 7 days. Injective, $21 million. Lido, $14.4 million. Avalanche, $111 million. DYDX, $14 million. Optimism, $35 million. Sui, mentioning again, about $500,000. And HBAR, $78 million. In fact, the news for HBAR couldn't have come at a better time, because this will help a lot of these people exit as well now that the price is pumping. So let's talk about some scary news. Now, I did make a forecast back in 2022 that I expected the US deficit in 2023 to be 2.4 million, because I said tax receipts are going to be zero. The budget office is wrong. And here we are. So tax receipts so far this year are down 7% from expectations, and spending is up 14%. And this is exploding the US deficit, and I'm sure deficits all across the world are doing the same thing right now. But that is stunning. The US federal budget deficit has widened to 2.26 trillion. And that is massive. And there's not even a disaster happening like C19. So we are on target. Easy to smash 2.4. In fact, I'm upping my deficit prediction for 2023 to 2.6 trillion, maybe even higher. We shall see. But it's just crazy. And there's no way. It just keeps going on the credit card, going on the credit card, going on the credit card. The debt spiral is accelerating, but way faster than anybody even expected. So this is the kind of the scary news that I warned you at the beginning. Seatbelts on, please. This is a Wall Street Journal article, and it is in fact, I'm planning a retirement series to look at kind of what people have, what people need, how they can go about retiring. If anybody's interested, drop a comment below. Write a comment on if you're interested in that type of video. It tends to be very dry, but a lot of people are looking forward to financial freedom and early retirement and stuff. So let me know. But this really took me aback. And you can see here, not only, well, the two things. If you look at the green arrow at the top, 0% of American families have anything saved for retirement. 0%, which means they are fully dependent on the government for the future. Think universal basic income. It's coming. And in fact, I've got this theory that people no longer care anymore, and they're just throwing everything on the credit card. It's like, yeah, the government's going to take care of me after everything that happened in 2020. I don't care anymore. So I'm seeing a lot of that, sensing a lot of that. People are becoming hopeless, but being hopeless is not a good strategy, and having hope is also not a good strategy either. But the other thing that's kind of striking about this, only 0.1% of US families have $5 million or more. And that sounds like a crazy number. But looking at some of these numbers, many expect if you want a fruitful retirement, you might just need $5 million to help you and your family retire in a good quality of life. That is staggering. So anyway, if you want me to dig more into that, I can. Let me know if there's any interest. And finally, and this goes to the theory that I think everybody's just putting everything on the credit card. While nobody has anything saved for retirement, half of US families have zero. You can see here, credit card debt has exploded. It just hit $1 trillion last week. Now it's already $1.0317 trillion. It is going up fast. Average interest rate on a credit card is now over 29%. And this is helping that explode. Just like the US tally is exploding, the deficit is exploding, individual debt is also exploding too. So be careful out there, everybody. I hope you like the show. Thanks again to everybody on Patreon. Thank you to the mods in the chat. Scary times. So happy Tuesday. Sorry for the grief tidings towards the end, but you'll see me tomorrow. We have a fun one tomorrow too. Okay. Thank you everybody for being here, and catch you later. Bye.